News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we end the week with a market rally around the world. U.S. futures are building on yesterday's tech-led gains on Wall Street. The Stoxx Europe 600s hit an all-time high, but the real action was in Asia, where the KOSPI index in South Korea rebounded from a three-day sell-off to surge 18%. We get more from Bloomberg Markets reporter Mark Cudmore in Singapore.
It's insane, isn't it? On Wednesday, it was down 21.3% for the week. Then it had a 26% rally between Wednesday's lows and Friday's highs. This is one of the world's largest stock markets. Through the GFC, we saw some wild moves. In the dot-com era, we saw some wild moves. This is pretty insane for one of the world's largest stock markets.
Bloomberg's Mark Cudmore notes SK Hynix and Samsung Electronics each rose more than 22%.
Well, Nathan, the gains in Korea follow a big rally for chip stocks here in the U.S. The Philadelphia Semiconductor Index, known as the SOX, climbed 8.2% yesterday, and Microsoft soared 16% for its best one-day performance in 18 years following strong earnings.
And the high-tech earnings continue, Karen, with Amazon. Those shares are up nearly 12% in the pre-market. The company reported cloud computing revenue accelerated for a fifth straight quarter. Amazon's e-commerce operation still generates the biggest share of its revenue, but online sales gained 15% to more than $70 billion. Poonam Goyal covers Amazon for Bloomberg Intelligence.
It looks like broad-based strength across the board. The retail numbers were particularly good, and that was expected because we had the Prime Day shift moving in from 3Q to 2Q. So overall, really nice numbers here on the retail side. Consumers came to Amazon to shop Prime Day sales, and the shift to online just continues to appear more and more apparent as we move through a tough consumer spending cycle.
And Poonam Goyal of Bloomberg Intelligence says Amazon raised its projection for 2026 capital expenditures to $220 billion from a previous estimate of $200 billion. Most of that, Amazon says, is going to AI.
Well, Amazon is surging. Nathan, investors are taking a big bite out of Apple shares this morning. That stock is down more than 7%. The iPhone maker delivered a disappointing sales forecast. Apple's been struggling with shortages of computer processors and fast rising memory costs. As for the previous quarter, sales topped estimates, climbing 16% to more than $109 billion. Mark Gurman covers Apple for Bloomberg.
My take is that the iPhone number looks great. My take is that the Mac number looks amazing. My take is that service is a little soft, and the China number missed the estimate we have here on the Bloomberg terminal. But at the same time, that is, pretty nice growth on an annual basis, where they were sort of, I guess, in the toilet in China a couple of years ago and last year, but they've totally rebounded there.
Bloomberg's Mark Gurman says the quarter served as a swan song of sorts for Tim Cook, Apple's leader since 2011. He's handing the reins to hardware head John Ternus on September 1st.
And Karen, earnings continue today, but big oil is going to be the focus. Both ExxonMobil and Chevron report this morning. We get a preview from Bloomberg's Tom Busby.
No doubt the war in Iran has been a boost to both oil giants, with oil prices up sharply for the entire second quarter. Chevron has shown a willingness to use the money it's made to explore new growth areas, including projects in Venezuela and Argentina and a potential deal in Iraq. ExxonMobil's earnings and revenue are forecast to be the highest since Russia invaded Ukraine in 2022. At Chevron, Bloomberg consensus calls for revenue of $67.93 billion on adjusted earnings per share of $5.65. For Exxon, Bloomberg consensus calls for revenue of $103.1 billion and earnings per share of $3.54. Tom Busby, Bloomberg Radio.
All right, Tom, thank you. We turn to the economy now. A raft of U.S. economic data did little to dispel investor anxiety that is keeping yields near multi-year highs. And Bloomberg's John Tucker is here with more. John, good morning.
Yeah, good morning, Karen. Yeah, the data included the Fed's preferred inflation measure, which eased, but that's pretty much in the rearview mirror. It was driven by a temporary drop in oil and gasoline that's already reversed. Now, the focus for the Treasury market remains the Fed's decision to hold rates steady despite stubborn inflation. The yield on the 30-year bond rose as much as 4 basis points yesterday before paring its increase. Right now, hovering at 5.18%. The yield on the 10-year Treasury note, which pretty much underpins the cost of borrowing from mortgages to business loans, that remains close to the highest level since President Trump returned to the White House. Well, the average 30-year mortgage rate, that climbed to the highest in almost a year. Meantime, the Fed's 2% inflation target that has now been exceeded each month since March of 2021. In New York, I'm John Tucker, Bloomberg Radio.
Okay, John, thank you. In Asia, the Bank of Japan held its policy rate steady after officials took the rare step of wading back into the currency market just hours earlier with apparent help from the U.S. Treasury Secretary Scott Bessent told Fox Business the yen should strengthen from current levels.
Japanese yen seems very undervalued to me. The currency is very cheap. The economy is doing well. The prime minister is very popular and enacting very strong policies. And I think we're going to see the fundamentals come through. At a point that the market will realize the yen is undervalued and should strengthen.
That was Treasury Secretary Scott Bessent, and the yen gained as much as 3.3% against the dollar in New York trading yesterday. Those gains continue this morning with the yen up about 0.5% at 158.74 against the dollar.
And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.